is, does the rising energy costs affect, the Federal Reserve's rate increases? Is that going to accelerate it because inflation will spike alongside with rising energy costs?
Yeah, so we had a 7.5% increase in inflation and on the last report year over year, and we saw energy prices jump 27%, right, in that same time frame. And so it's a big driver of the inflationary situation. And the Federal Reserve is now currently looking, they have two mandates, what they call full employment, or basically helping the job market, and keeping inflation down, right? And those are kind of contrary to each other, actually. They're kind of interesting that they try to find a balance there. They are looking at this job market, and the job reports probably that we just came out today would make them feel even better about this. But they think this job market's really hot. I mean, Powell just testified this week. They think the job market's fantastic, and there was 676,000 jobs created. That was just reported today, and that was way more than expectations. So the job market's really, really good. From an inflationary standpoint, wages didn't go up that much, only 0.1%. So that's actually a good thing from inflation. But situation in Ukraine is driving up the price of oil. You know, it hit $150 a barrel back in 2007. We did survive that, by the way. I wouldn't be surprised to see us getting there again, and we seem to be working our way in that direction. And especially since, although Russia doesn't produce a massive quantity, it's 10% of the world's, oil needs, for example. It'll take some time for that to be absorbed by these other producers, especially since oil production's already been tight. It's already been tight because of the pandemic slowed down, oil production slowed down. It just hasn't caught up fast enough to demand has been coming up faster than supply for everything, including oil. And so that's why we're seeing an increase there. So when you see an increase in energy prices, there's a couple things that can happen there. Number one, it can cause an inflationary situation if companies can pass along that increased cost to the consumer. So can Federal Express, who uses gas, for example, to drive their trucks, can they increase the cost to the consumer for package delivery without losing a lot of demand, right? Because in economics, and when you increase the cost, oftentimes the demand will drop, right? It's kind of guns and butters, what we learned in Econ 101. And one of the things that happens there so far, we haven't seen demand drop off. Demand just keeps on going. It's crazy. Retail sales are going and all these things. Here in America, people have a lot of money on average. The total net worth of Americans grew by $36 trillion from the bottom of the pandemic to the end of last year. And so people have enough money to pay more for that Federal Express or pay more for that food. Now, there's always this group at the bottom that's going to get hammered here, and that's the real problem of this. And this is why they got to get this under control. But so the Fed would see that inflation coming through from energy, and they can try to raise rates. And what happened then is that raising rates can slow demand. And that has the potential to then eventually slow the amount of growth that's happening in energy. A great example is if when they closed down the economy, right, oil went to negative $40 for one day. So when demand drops enough, the price of oil drops. And so if the Federal Reserve can push up interest rates, slow down demand, then that basically means that they could bring the price of oil down in that regards. It's not a perfect correlation. We're just one country. There's all kinds of different dynamics that happen as far as that goes. The other scenario that's interesting is just that if they are raising rates at a higher rate because of the oil price, because that's pushing inflation, that can create slow growth altogether, right? You can bring down the economy's growth to the point where you could create recession. And that is probably the biggest fear that's out there. I don't subscribe to that because I think the economy is hot enough to handle some of these rate increases, even if they do get a little bit aggressive. But that's a different story. And so I actually think that some slower growth is better. We have too much growth, it's too hot, and that's creating this inflation. And if we got back to a more moderate growth pace, I mean, the gross domestic product grew 7% in the fourth quarter. That's ridiculous for a country our size. And so we're usually at 2 or 2.5 or 2.3 or something along those lines. So getting back to that kind of more normal growth cycle would, I think, be a good thing. There'd be some adjustments. Stock market would have to adjust with that too. Lastly, if companies cannot pass along the extra cost, so Federal Express finds that even their cost of gas keeps going up and up and up, then obviously what happens is they want to raise the price of their package delivery, but then all of a sudden their demand starts dropping off a whole bunch. They reached a point where they can't. That means that they're basically going to make less money, right? And this is not just Federal Express; it's all companies that have to deal with energy, which is most. I mean, even our company deals with heating and cooling, and we have to pay for that and such. If that goes up a lot, if consumers are paying more, I saw a stat I thought was kind of interesting, and you were telling me too that an average gas price in the U.S. went up to 3.89, right? I think it's here in California. What would you say it was in California?
I think California just broke $5
Yeah, average.
for like the lowest octane gas.
Yeah,
So
probably the 87. So,
yeah.
if you're spending $5 instead of $4 at the gas pump, right? That's money that could be going someplace else, and so that definitely is a drag on the economy as far as that goes too. So, um, those are the issues that you deal with increasing energy prices. And, generally they're not great. One of the hedges there is to own energy. We don't have a big energy exposure in our portfolio, um, just because of the volatility and the fact that a couple of countries can just decide to turn up the production dramatically and wipe out your energy stock portfolio piece, and so that always makes me a little bit nervous as far as that goes.
What about clean energy though?
Yeah,
Would that be an interesting play? Because with high energy prices, does it, clean energy just become a little bit more of a viable option for investment?
Yeah, I think clean energy has a couple of pieces going for them. One is higher energy costs, right? I mean, it just makes it more viable. When oil is selling at $40 a barrel, it's a lot harder to convince somebody to spend money on solar that or whatever wind that might cost more than that to produce. I don't know the exact numbers for all these things, but when oil's at $120 a barrel, $150 a barrel, yeah, all of a sudden people start taking a look at that. But I actually think there's another component driving this, and that is this kind of energy security. I would bet you anything that Germany is looking at their situation right now thinking, wow, this was a mistake to be in a scenario where 50% of our gas is coming from Russia. And these pipelines are great, and they're probably getting great prices on all this stuff. But now they're going to have to go through a lot of pain in dealing with this. And so just adjusting away from Russia, and so one thing will be this more production from these other countries, to kind of create more. But I think you're going to see a big push into that clean energy arena, because if you're producing your own solar and wind and geothermal or whatever it is that you're going to call clean energy, in your country, that gives you more capabilities. And I know China's been working on it really dramatically because they still get a lot of their energy products from outside their country. So if they can produce that in a clean energy manner, become independent. Becoming energy independent is pretty critical, I think, in this kind of geopolitical situation that we're in now. So, yeah, you could see some great gains out of clean energy. We saw a massive, massive run up in clean energy in 2020, right? Just unbelievable. I mean, we had some pieces that it just went nuts. And then they just really sold off through 2021 and even through the beginning of this year. Just now, since this invasion started, we're starting to see some of those move again. Um, the only problem that I see from a stock market standpoint, there's a usage standpoint and then there's a stock market standpoint, is that some of those companies are still overvalued. They got run up so much. And in this environment, the market is looking for cash flow, earnings, revenues, and some of these companies don't quite have that yet. Um, I know Tesla's actually had a decent run up since the invasion started. That's a company that has cash flow, has earnings, has battery storage. They have a lot of clean energy pieces that some of these places might be interested in. So there are a few plays out there like that are kind of fascinating. We might see some good gains out of that. I hope so. I love that category. We haven't been in it much anymore just because it's gotten hit so hard. But it'd be fun to see it come back. It's just I worry a little bit about the valuation still, just because it's still kind of early cycle in that arena.